Some changes in the Action Alerts Plus portfolio. I'm here with Research Director Jack Mohr. Jack, good to see you.
You too.
And you guys said bye-bye to Mondelez. You were done.
Yeah, and so kind of the rationale behind this was about a month back, the company posted their quarterly results. But the guidance that they gave was severely disappointing. So Mondelez had always been trumping, and the entire argument behind the investment was that they could achieve this holy grail in packaged foods of growing their sales while also growing their margins. Very difficult in this environment, especially when you're a global company and have exposure to some pretty risky countries. Now, they totally disappointed, and it demonstrated at that point. I think the stock sold off from 43, 44 back to 36, 37 after the news, and we at the time were worried that this was going to be a recurring issue, and we set a price target and said after it crosses 41 or 42, we're going to sell it. Now it came back from 36 and a half, and change to 42 and change, and so we sold it and got into what we think is a far more stable consumer name in Pepsi.
Right, all right, and not just Pepsi, but Schlumberger as well. So you're kind of just beefing up those positions. But let's compare and contrast Pepsi to Mondelez in terms of why you think that's more stable.
I mean, Pepsi has a very clear, consistent narrative. It under-promises, over-delivers. It has a yield that it's 2.8%, which I think is pretty compelling in and of itself. But the company's ability and its diversification, but its narrowing of its portfolio at the same time in finding kind of the right balance between fast-growing categories and also cash cow categories is very compelling. Now, their operational efficiency, their margins are not only consistent, but they're the best in the industry. Their ability to take the cash and convert it into sales and then convert that back into cash flow is absolutely incredible. It's a stable company, diversified, large. Same with Schlumberger on the energy side. Stable, diversified, large, able to leverage at scale, and you can really trust in the forecast that management is providing. And I actually think that they are constantly lowballing their forecasts. So in comparison to a Mondelez that the trust was eroded, we have a lot more trust in Pepsi and Schlumberger, the management teams and the business models.
All right, Jack Mohr, thanks.
Thank you.
I'm Rhonda Schaffler for TheStreet.